Welcome to the deep dive. Ever get overwhelmed trying to figure out how public money is actually accounted for?
It can definitely be a lot to take in.
Exactly. So today we're diving into fund financial statements.
Right.
We've got the actual documents here for governmental, proprietary, and fiduciary funds. And our mission really is just to cut through all that jargon and pull out the key differences, show you how public dollars are tracked in these different buckets.
Sounds good. Where should we start?
Let's kick off with governmental funds.
Okay. Governmental funds, these are really about the basic services a government provides, like public safety or administration. The two big reports are the balance sheet and the statement of revenues, expenditures, and changes in fund balance.
Right. And that balance sheet equation, it's a bit different, isn't it?
It is. It's assets plus deferred outflows equals liabilities plus deferred inflows plus fund balance.
Deferred outflows and inflows. Can you quickly break those down?
Sure. Think of deferred outflows as like resources the government used up this period that really belong to a future period's expenses. And deferred inflows are resources they received but haven't technically earned yet according to the accounting rules.
Got it. Okay, so I know not all these funds get the same spotlight. There's this major fund idea, right, with the 10 and 5% tests.
Exactly. You need to identify the really significant funds. So a fund is major if its revenues or expenditures or assets and deferred outflows or liabilities and deferred inflows are at least 10% of the total for all governmental funds.
Okay, 10% of governmental.
And this is the second part. It also has to be at least 5% of the total for both governmental and enterprise funds combined for that same element.
So it's a two-part test.
Oh.
Ensures it's significant both within governmental activities and compared to the government's business-type activities.
Precisely. It flags the funds with the biggest financial footprint overall.
Are there funds that bypass these tests? Or any special rules?
Yep. A couple of key ones. The general fund that's the main operating fund, it's always major. No tests needed.
Makes sense.
Also, government officials can choose to designate any fund as major if they think it's particularly important for citizens to see its details separately.
Okay.
And importantly, internal service funds, those providing services between departments and things like one-off extraordinary items or transfers, they're generally excluded from these calculations.
Right. So looking at this progressive township example balance sheet.
Yeah.
So the general fund, then HUD programs, a couple for the convention center, and it lays out their assets, liabilities, those deferred inflows, and then the fund balances, restricted, committed, unassigned. Gives you that snapshot.
Exactly. A point-in-time picture.
Okay, let's switch gears then. Proprietary funds, the business side of things.
Right. These funds are for government activities that charge fees for services, kind of like a private business. Think water utilities, parking garages, that sort of thing.
And their statements are different too.
They are. They use a statement of net position, which is similar to a balance sheet, but uses that net position terminology. Then there's a statement of revenues, expenses, and changes in fund net position. Notice expenses, not expenditures here. It's more like business accounting. And a statement of cash flows.
The cash flow statement. I heard that's where things get a bit unique compared to a regular company.
They really do. First, they must use the direct method showing actual cash coming in and going out for operations. No indirect method allowed here.
Okay.
And the reconciliation connects operating income to net cash flow from operations, not the overall net income. Plus, the categories are different. There are 4. Operating, then capital and related financing.
Capital financing first.
Yes. Capital financing, then non-capital financing, and then investing activities. The order's different. And buying capital assets, like building a new facility, is actually shown under financing activities, not investing. That's a big switch from commercial GAAP.
Interesting. So revenue from water bills would be operating.
Right.
But issuing bonds to build the water plant is capital financing.
You got it. And maybe a government grant that isn't tied to capital projects would be non-capital financing. Investing is more about buying and selling investments, like stocks and bonds.
Looking at Progressive Township's proprietary fund statement.
Yeah.
Yeah, I see water and sewer parking facilities listed as business-type activities. And they also show internal service funds under governmental activities here. Again, assets, liabilities, deferred items, and net position broken down.
It mirrors that business-style reporting.
Okay, one more category. Fiduciary funds. What's their story?
Fiduciary funds are all about the government holding money for someone else. They're acting as a trustee or agent. Think employee pension funds or maybe taxes collected for another government unit.
So it's not the government's money to spend on its own programs.
Exactly. That's the key distinction. The main statements are the statement of fiduciary net position and the statement of changes in fiduciary net position. The net position statement looks pretty similar to the government-wide statement format.
And in the Progressive Township example, we see pension trusts, private purpose trusts, custodial funds, showing the assets they hold in trust and any liabilities against them.
Right. And the statement of changes just shows what came in contributions, investment earnings, and what went out, benefit payments, admin costs, additions, and deductions.
So wrapping this up, understanding these three distinct fund types, governmental, proprietary, fiduciary, and how they each report things differently really is crucial, isn't it?
Absolutely. It gives you, the reader of these statements, a much richer, more detailed understanding of how a government manages all the different kinds of resources it handles. You see the core services, the business-like operations, and the money held in trust, all accounted for appropriately.
It definitely moves beyond just one big pot of money. So as you think about your own city or county, knowing that finances are sliced and diced this way, what does that make you wonder about how transparent or accountable your local government is with its finances? Something to chew on. That's your shortcut for today.